All right, let's quickly move on to our next discussion. We're putting the spotlight on the auto sector now. Remember, Bajaj Auto is kicking off the earnings season for the sector today. And the expectations are running really mixed. Two-wheeler volumes have been reporting a pretty healthy rise of almost 13% in the quarter. But we all know that CVs and PVs have been pretty sluggish. Kumar Rakesh, India analyst at BNP Paribas, who tracks the space, is now joining in. Kumar, great to have you on. That's really the question, right? So let's take it, dissect it. And I'm going to start with the weak news first, which is passenger vehicles, right? So what are you expecting for the large players? I think on the SUV side, M&M has still managed to keep the flag flying high. There is Maruti. What's the overall sense on PV and on the passenger vehicle stocks?
Hi, good morning. Thank you for having me on the show. So yeah, for passenger vehicle and the commercial vehicle sectors, this quarter was quite weak, and we would expect that to reflect on the revenue performance as well. The high base and now pent-up demand not being there in the system has obviously started impacting the demand, which has started reflecting in inventory buildup, the discount also going up. And that is a phenomena we are tracking globally as well, not just in India, where the demand has started slowing down in some markets far more dramatically than what it is visible in India. But that's a phenomena which we are seeing in India as well, that for passenger vehicle, at least the demand in the near term seems to be slowing down. But we'll have to keep in mind that we are coming off from a very high base over the last 2-3 years, where there was very strong pent-up demand. So we are going through that adjustment phase in which, given the high base and lack of pent-up demand, we'll see some moderation for a few quarters.
I was just coming to that. So you're saying moderation for a few quarters. So basically, we are somewhere in the middle of the slowdown cycle, right? We are nowhere close to the end. Is that for PVs or also CVs? Where are we in terms of the downtrend? And when do you see light at the end of the tunnel?
So for passenger vehicle, we would possibly see another quarter of sluggish growth, and then we would expect by fourth quarter the base should start getting a little more favorable. And going into next financial year, the underlying fundamentals of the sector continues to be quite robust, and we would expect that to start playing out. And hence for the next year, we would expect FY26 volume growth to be better than FY25 volume growth. From CV perspective, the first quarter in this financial year was surprisingly quite strong, but second quarter, given the low infrastructure spending and more importantly, monsoon, we possibly saw much weaker demand in the September quarter. It would be critical to see how the demand is panning out in the immediate next one month or two. If that starts picking up there, we would start believing that there is an upcycle which should be underway and the trough should largely be behind, which is what our base case expectation right now is, that the trough with September quarter is behind us. But we would need evidence of that in the immediate month or two numbers as well.
Okay, all right. So that tells us about the CV and the PV picture and the wait ahead before things start turning around. Let's come to two-wheelers. That's the more exciting space, right? So just tell us how you're expecting the trends to be, and also give us a sense on stocks under your coverage. Which are the ones that you have a buy on, which can still be bought at current valuations? I don't know if Bajaj makes the cut because it's already seen such a huge move, right?
Yeah, so first on the overall sector, that definitely since last year's festival season has seen a very strong demand pullback, recovery, and that partly is also helped by a much better financing which is available for two-wheeler customers. And you would see that across OEMs, the financing penetration has increased. And in the recent data which we are tracking, both for the rural as well as urban demand drivers, seems to be really turning more favorable. So there appears to be a holistic, both from financing perspective as well as from demand driver perspective, things turning out to be far more positive for the two-wheeler sector. And the only challenge with the two-wheeler sector would be that from second half of this financial year onwards, the base will start becoming far more tougher. In the first half of this financial year, we have seen close to mid-teen volume growth. We would start seeing a far higher moderation from that high level of volume growth that we have seen in the recent months as we get into the second half. And from there on, we would see a much more normalized growth for the two-wheeler industry going into FY26 onwards.
Okay,
from
so
stock pick perspective.
Yeah, carry on.
From stock pick perspective, Bajaj, we think that should be looked at more from the dividend yield perspective and free cash flow yield, because their payout and, more importantly, their free cash flow generation over the last 2-3 years have significantly improved. So when looked at from a PE perspective, it obviously looks like it has dramatically re-rated and there may not be a lot of potential left. But their dividend yield still looks reasonably attractive despite the re-rating, given the higher free cash flow generation and better payout ratios.
All right, Kumar, thank you very much for stopping by and giving us the perspective on the auto space. Appreciate your views.